with those updates. Let's get some fundamental conversation on the markets. Pawan Parakh, the fund manager at Geojit Financial, joins us now for just that. Pawan, good morning. Thank you so much for joining in. Well, you know, I was going through the Beacon Fund's top holdings, and the interesting names there are Inox Wind, SW Solar, and this renewable theme that has been working off late. But there have also been a lot of reports that this capacity is unutilized, a lot of these capex that has been done by these companies. What makes you so bullish? A lot of them have already done up quite a bit. Do you think this outperformance could continue?
Yeah, hi. I think renewable is one space we've been positive for quite some time. These stocks have made a lot of money for our investors in our funds, and we continue to remain very positive because you mean look at the bigger picture first. Power as a sector, we've been grossly underinvested in the last decade, and now with Digital India, Make in India, and everything, I think electricity is very important for India to continue to grow. Now, having said that, within this electricity theme, renewable is the future. And within renewable, you hardly have got few names to play. As far as these companies are concerned, I think, since they were also going through some tough period, they're ramping up the capacities now. But the important thing to note out here is that a lot of these companies, while they're operating at 50% or 45% of their capacity utilization, they're still expanding their capacities because that is the kind of demand that they're seeing in next 2, 3, 4 years. So I'll not be surprised if these companies deliver more than 20-25% growth in revenues and profits over the next 3, 4 years. And hence, considering that within the industrial space, this is one space which has got very high revenue growth visibility, and valuations are relatively cheaper versus the other in the past.
Pawan, hi. I wanted to get your thoughts in on Delhivery because that is one of your top 10 holdings. Now, it listed 3.5 years back, and the issue price back then was closer to 500. So since then, of course, the stock has not done, very well. But you entered much later. So what was the price that you entered in, and what is the rationale? Because to a layman, it appears that there are still some headwinds. So, for instance, companies like Meesho have their own in-house delivery, logistic providers. There is that competition coming through from quick commerce, etc. Talk to us about the narrative behind Delhivery.
Right. I think before I talk about Delhivery, you must notice that we are very positive on a lot of these new generation themes within the tech side, and Delhivery is just one of them. Think about it this way, if Delhivery is one of the lowest cost logistics service provider in the country. If Make in India has to do well, if government has to achieve its target of manufacturing, urbanization, there's so many initiatives the government is taking. For a country like India, you hardly have got a large cap logistic company in the country, right? And Delhivery has got all the ingredients of being one of the foremost player in the logistics space. For the last 3, 4 years, there've been multiple things which have dragged down the stock price. One is that they were in the investment phase. Then they made some acquisition, which led to a weak year in terms of FY23. Now, as things stand today, what we believe is that one, all the investments have been done, and incremental revenues will have substantially high gross margins, which means that there will be huge operating leverage in play. So, I would want to believe that in next 3 years, this company will at least double or triple its EBITDA, right? And that is what makes us really excited about this company. Like all other tech companies, this company has got a strong balance sheet and cash. There's cash on the balance sheet as well. As far as this concern around Meesho is concerned, I must tell you, Meesho is just one of the clients. Delhivery is catering to all the large e-commerce guys. It is catering to a lot of the D2C guys. So Meesho is just one client, and with one client here and there, I don't think it changes the fortune of the company. Obviously, it would create 1 or 2 quarters or 1 or 2 years of subdued performance, but that's it. As far as competition for quick commerce is concerned, I think quick commerce largely is for groceries or things which you need on a quick basis. But to compete this, even Delhivery is getting into rapid commerce, wherein they will deliver within 2 to 4 hours. So, we feel very positive about this company.
Okay, all right. Thank you so much for joining in today with your thoughts on individual names and themes as well. But we have to get into a quick commercial break. On the other side, we'll continue our